we can eliminate that estate tax, that death tax, which has huge implications to make an impact for the next 20 years because there's about $84 trillion estimated to transfer. And this is the battle for the most amount of wealth in the history of the planet that's ever transferred in a 20-year period that we know of. And it's happening. And so we're on this front lines of this wealth transfer. And so to be able to eliminate that estate tax, to defer that capital gains tax, and to invest these funds into other businesses, other real estate, can solve the housing crisis, can solve a lot of big challenges that we're facing, but also create more jobs and more tax revenue. Hey, I appreciate that. Yeah, we believe we are on a mission, right? And our mission is to really help people unlock the capital gains tax, to unlock freedom and impact. And it means a little bit different things to different people. And to the extent that you have a clear vision of what you're trying to achieve post-close will determine what's the best course of action and best plan. And the deferred sales trust often is just that great, amazing plan that gives you that flexibility to invest, to diversify, and to get timing on your side too. There's no timing restrictions. Also, for the ultra high net worth individuals that have like $1 billion exits, they have what's called estate tax. And I think this is an important thing to touch on. Most people either have to buy a bunch of life insurance, they have to give it all away, or set up foundations that can be really challenging. Whereas with the deferred sales trust plus, it's 2.0, we can eliminate the estate tax in one sale in one day on one exit forever. And so if you have a $1 billion exit and you're going to be exiting, we can use the DST plus to receive the capital, and that $1 billion plus all of the growth over your lifetime is outside of your taxable estate, which eliminates that 40% death tax. And this is massive because most of us, we've been taught that you get a stepped up basis upon your death and then your kids walk away tax free. Well, that's only part of the story. That's just capital gains tax. Has nothing to do with the estate tax. And so if you've seen the show, I don't know if you've seen it, Yellowstone, there's Kevin Costner, and then his daughter Beth is the attorney. And the entire show is centered around this big piece of land in Montana from the family. And he is the last, he's one of the, his wife's already died. So Kevin's like, if he dies, the estate tax is triggered, right? And so in the meantime, everyone's trying to get the land all the different ways. But Beth's like, Dad, in one of the episodes, she's like, hey, like, Dad, if you don't sell it now and you die, it's going to get taken away anyways because the death tax is going to kick in, right? And so so I'm like, every time I watch it, I'm like, hey, Kevin, the DST plus, man, like we can help you. And like we'd solve the whole show. Like it'd be good, right? It does take a sale, but upon that sale, we can eliminate that estate tax, that death tax, which has huge implications to make an impact for the next 20 years because there's about $84 trillion estimated to transfer. And this is the battle for the most amount of wealth in the history of the planet that's ever transferred in a 20-year period that we know of. And it's happening. And so we're on this front lines of this wealth transfer. And so to be able to eliminate that estate tax, to defer that capital gains tax, and to invest these funds into other businesses, other real estate, can solve the housing crisis, can solve a lot of big challenges that we're facing, but also create more jobs and more tax revenue, which is ultimately why these things work, right? Mm-hmm. The government does want to incentivize us to create businesses, to build housing, and that's what creates more jobs, and those more jobs creates more tax revenue. So it's actually a win-win for everybody, but you've got to know how to do it, when to do it, and that's why we exist.
Cool. Well, again, we're talking to Brett Swarts with capitalgainstaxsolutions.com. You're involved in social media. You've written a book. Can you tell us other areas that people can find you and a little bit about your book?
Absolutely. Yeah. So it's called Building a Capital Gains Tax Exit Plan. And so we came out with the book about a year ago, hit #1 bestseller on Amazon on some of the wealth and real estate categories, which is pretty cool. We have people like Kevin Harrington from Shark Tank in the book. There's people like Don Winter with DLP Capital, and people like David Young, a top financial advisor in the country. And essentially, it's a part of my story about learning about the deferred sales trust, the beginning of the entrepreneurial journey, working at the Cheesecake Factory, working the side hustles at basketball tournaments, but still working at Marcus and Millichap by day, learning about this in the 08 crash, and then the journey to become a trustee and be able to offer this service to my clients, and so much more. And I know a lot of other smart people talking about business and entrepreneurs. In fact, Kevin talks about Mentor to Millions and all the companies that he's built and how he's giving back. And so that's what we're trying to do, get in the book with a lot of really smart people that have a great wisdom and advice. So it's more than just a tax book. We geek out about tax, but it's more than that. It is about an entrepreneurial entrepreneurial journey and a story. So you can check that out on Amazon, Building a Capital Gains Tax Exit Plan.